You have $100,000 and you want to invest it. And now you have questions. Do I invest all of it? Where do I invest it in? Do I put everything into one investment or do I split it? $100,000 is a lot of money and you want to make sure to invest it wisely so that you get the most out of it. So let's take a look at some options. Now, I personally passed 100K several years ago and I have just 90% in a world portfolio of low-cost index funds and 10% in cash. So if you're fairly risk-seeking and have a long time horizon and no debt, that would be one possible option, but it might not be the wisest decision for you and your unique situation. So maybe let's go through this with a couple of questions. And the first is, do you have debt? If yes, pay it off. Except maybe with a mortgage, but even with a mortgage, you might consider paying it off early, depending on how high your interest rate is and also how high it might become in the future. If you don't have debt, we can proceed with question 2. And that is, what do you want that money to do for you? And there are many different options here, like I want that money to earn me more money. I want it to generate an income stream. I want it to be safe and not lose value, or I want it to use to learn something new or invest in my future. And your final strategy will depend on the answers you give here, so really take some time to think. Question number 3 is, how much risk am I willing to take? Now, I am assuming that you don't have debt, except maybe a low interest rate mortgage, that you have a time horizon of more than 20 years, and that you have reached financial security. If not, then the strategy for the 100K would be a completely different one. If you want to find out if you've reached financial security, there is a checklist you can download in the video description. Now, we will get to the different investment options in a second, but the kind of risk I'm talking about here is, for example, the market risk. Now, the prices on the market go up and down all the time. Can you bear seeing them go down? Then there is an interest rate risk. For example, if you decide to put your money into fixed income, and you tie it up for maybe up to 10 years, and then the interest rates go even higher in the next couple of years, would that be okay for you? And there's also inflation risk, so if you leave the money in cash, the purchasing power will go down over time. So with those considerations in mind, let's get to question number 4, which is, what are my investment options? Of course, there is the stock market. Theoretically, you can buy single stocks. I don't recommend it because a vast majority of private investors don't perform better than the market itself. And that is because they overtrade, they have a bad market timing, they follow herd behavior, they make decisions based on emotions, and they don't diversify enough. What I prefer instead are index funds, either in the form of a mutual index fund or of an ETF, an exchange traded fund, that are diversified over the whole world or at least over whole economies. Now, the stock market is the more riskier option, but it also has the market risk. A safer alternative are bonds and fixed income, or also precious metals. Although here then you have the interest rate risk, which we already talked about. You could put your money into real estate, and there are mainly 2 options to do that. Either you buy a home for yourself or you buy a rental property to generate some income for yourself. Now, as for buying the home for yourself, I know it's nice to own your own home. Just know that if you do that, it's not an investment because it doesn't generate you income. On the contrary, it costs you money because you have to pay taxes and you have to pay maintenance. And if you have to take on a mortgage, it adds even more risk for you. So buying your own home is more a lifestyle decision than it is an investment decision. I will not go deeper into this here, but I will link a video from Wamid Sethi on the matter where he goes into detail and also runs some numbers. The other option is to put it into a rental property. Now, I personally have a multiple 6-figure net worth and I haven't invested into real estate yet. And that is mainly for 3 reasons. The first one, it's very time intensive. If you want to buy it yourself, you have to do heavy research. If you don't want to risk losing money or making a bad decision. So that means researching real estate as an investment. And then, of course, you also have to research the single properties and making contact with banks and all that stuff. The second is that diversification is practically not possible. So even if you live in an area where you can still buy properties for maybe $30,000 or $50,000, if we calculate with 100K, that is still 30 to 50% of the whole thing. And third, when you have to take on a mortgage for that property additionally, even if it's cash flow covered, it just adds more risk. And that is something that I wanted to avoid. Now, the only way I do invest in real estate is through a REIT, which is a real estate investment trust. And by that, I own a little bit of different houses and flats and projects over different places of the world. Okay, now there obviously are a lot of real estate guys out there. If you want to invest in real estate, of course you can, just do your own due diligence first. And then there are also alternative investments like crypto and other currencies, commodities, P2P lending and other kind of business investments. Now those alternative investments add more potential return, but therefore they also add more risk. So when we're talking about those here, I personally would not put more than 10% into those. If it's your first 100K, I would even put less, maybe even nothing. But that of course depends on your time horizon and your goals and also your risk tolerance. And that brings us to our last question. How do I actually allocate the money? Now this is where we take all our answers and put them into a form. And by form, I mean percentages, because I love percentages. Let's say, for example, you said that you want the money to work for you, but you also want to put something into travel and put something into education. Then we can say, okay, 5% each, travel and education, so 10% for that. And the 90% we invest. And if you're ready to take on some risk and you already have a cash reserve, you can put everything into the stock market. You could also say, okay, I put 70% into index funds and 30% into bonds and 10% into alternative investments. Or you could also say, okay, you keep 20% in cash and put 30% in bonds and 50% in the stock market. So how much you put into each depends on your personal preferences. Please also note that I am not a financial advisor, and before you get into any of those investments, please do your research first. You will find a lot of knowledge in books about personal finance, and if you are wondering which ones to read, I recommend this video next, where I go through a selection of the best personal finance books. Thank you for watching, and I hopefully see you in the next video. Bye bye.